Joining us right now to dig into the new retail sales numbers and the state of the consumer is Terry Lundgren. He's former Macy's president, CEO, and chairman. Of course, he's now the CEO of TJL Advisors. And Terry, what do you think of these numbers? Stronger numbers, as Rick was pointing out, the first time since October that we've seen a plus sign in front of the retail sales.
It's definitely stronger than we expected, Becky. It demonstrates that the consumer does still have firepower and is willing to spend, and this definitely surpassed our expectations. And I have to say, when you think about one of the biggest reasons why I'm surprised is because we're going against such strong numbers, and retailers are always looking to beat last year and the year before that. And this compounded gain is quite extraordinary. We've had 22 points of gain over the last 3 years in retail sales. So we're adding on top of that. I think it's a very surprisingly positive number.
We were talking earlier with Jan Niffen, and he was just pointing out that what you've seen for a while now has been that the luxury brands have done much better than some of the lower-end brands, and that makes a lot of sense when you consider inflation really cuts in higher food inflation, higher prices at the pump. That cuts in to lower-income consumers' ability to pay for things.
No question. We've talked about that in the past, that a larger and larger percent of net income for the lower and middle household income consumer is going toward shelter, and food, and energy. And when that happens, it obviously just reduces their ability to spend on discretionary items. So that doesn't affect that high-end consumer. You've got LVMH, one of my favorite companies, on the screen, and that consumer is going to continue to spend. And I think when there's more international travel, that business will go up even further, because many people like to shop when they're on their vacation or when they're traveling. So
for a long time, the markets, people in general, have been worried about what's happening to the economy, when you're going to see the consumer run out of cash, when you're going to see some of that excess savings that they've been putting away fall by the wayside, when you're going to see the jobs market get tougher. None of that has happened yet. Is this waiting for Godot, or you think this really is going to happen later this year? I do think it's going to eventually happen. You know, one of the key numbers here is the savings that consumers have. And historically, we Americans spend our savings, you know, in the middle and lower household incomes. We spend our savings, get it all the way down to zero. That hasn't been the case since the stimulus packages helped support those savings accounts. And it's maintained. So while that number has come down dramatically over the last 2.5 years, consumers still have more than $1 trillion in excess savings versus 2019. That, combined with higher wage growth, and as you mentioned, this very low unemployment number, is giving that consumer still the confidence to continue to spend. I do think, however, that as these inflationary bites keep challenging this consumer in terms of taking pieces of their overall net income, that consumption will slow down over time. And again, I had to remind us, we're just going against very, very strong retail sales numbers will continue over the next few quarters, and those will continue to be hard to beat. And yet you continue to see some retailers that are in trouble. I saw a Harmon store near me closing earlier this week, and that's part of the Bed Bath & Beyond store closures that are coming down. What other retailers do you think will be struggling? Well, Becky, I'm a broken record on this subject, but I was passionate, when I was leading both Neiman Marcus and Macy's Inc. on this subject. But it is so critically important to have a strong balance sheet when you are, getting through these more challenging periods, because those companies, not only can they survive during these times, but they can take market share from the weaker competitors who can't go on offense. And so anybody who entered this period with a weak balance sheet, who's just come off of bankruptcy, who has too much inventory that they have to liquidate, they don't have the liquidity to buy fresh new receipts, those are the companies are going to have a difficult time. Terry, thank you. Always great to see you. Thanks, Becky.